Good afternoon and welcome to the tax integrity session of the conference. My name is Ali Kazimi. I'm Managing Director of Hansuke and I'm going to be your moderator for this afternoon. And we've got a really fantastic panel and a really interesting set of topics that we're going to be discussing, things that I personally am very interested in, and a lot of my practice actually sort of like mirrors the theme of today's discussion. So first of all, I have pleasure to invite Jennie Haslett to deliver the keynote address. Jennie is a good friend, and I've been sort of like following what Jennie has been up to for the past few years, and she has really been in the thick of some really exciting work. We first met when she was working on introducing the corporate criminal offence of failure to prevent tax evasion facilitation, and so her team there, they were putting it all together, and that's when we first met. She kindly attended various series of events that we hosted at that time. After that, she went on to the Treasury, where her team worked on FATF's review of the UK, and I think they did a remarkably good job of preserving UK's reputation. So very well done, Jennie. And of late, she has the unenviable pleasure of working on trying to sort out a deal, a Brexit deal for us. So with that, Jennie, I'll pass across to you. If I've misrepresented or something, said something out of turn, please do correct.
No, that's a good summary of why I drink so much, Ali. Thank you. Good afternoon, everyone. So I think I should start with a confession, which is when Ali originally approached me to speak as part of a tax integrity panel, I was very reluctant, and I said no on the basis that it's been 3 years since I've worked in HMRC on a tax-specific role, so on offshore tax evasion, as Ali mentions. And I explained that to Ali and said, since I've left HMRC, I've worked on anti-bribery and corruption in what was the Foreign Office, and now I work on anti-money laundering. I don't really work on tax. And Ali said, it's exactly that kind of siloed thinking that is the problem. That's what creates all the issues and the struggles with compliance, people siloing and segmenting the issues rather than holistically looking at what we're trying to achieve. So having been suitably shamed, I thought, well, actually, that really resonates with me, what Ali was saying. When we were legislating for the 2 corporate criminal offences in the Criminal Finances Act, I went around a lot of businesses, both domestically and overseas, stress testing their what we call reasonable procedures, their prevention procedures. And actually the biggest challenge most firms seemed to face in the beginning was trying to work out whose job was it to do this. It would go from pillar to post, from tax teams to MLROs to the ABC teams. Sometimes it would end up with legal or general counsel. And most businesses couldn't just take a step back and say, what are we trying to achieve with all of this? And who has the levers to make sure we get the right outcome? So I think Ali reminded me of some lessons that I had forgotten from my past. And after that, I thought, yes, I can see why this panel is necessary. And I'm very happy to be a part of it. So thank you, Ali. And I think with that context in mind, I've approached this not so much as what is tax integrity, but what is integrity generally, and how does that apply in a tax-specific context? Now, I don't know about you, but in the current climate, it can feel like integrity is a little bit of an alien concept at the minute. So I thought I'd better just double check in the dictionary what integrity actually is. And the Cambridge Dictionary, we always go Cambridge instead of Oxford, tells us that it is the quality of being honest and having strong moral principles that you refuse to change. Although amusingly enough, the dictionary then gives the example, and I quote, "No one doubted that the president was a man of the highest integrity." And I thought, well, that rather confuses things in the current climate. But taking the definition at face value, I think what we can say is integrity isn't about a strict set of rules or a tick box exercise. It's about a general feeling of honesty and adherence to our principles, even in challenging situations. And I was thinking about that, particularly in the COVID context. And I thought most of us would probably say we act with integrity. We are good people and we live by the rules, except that we don't always live by the rules. Most of us aren't career-hardened criminal masterminds with a series of convictions to our names, but we do all break the rules now and again. So I thought, for anyone sat there thinking, I don't break the rules, let's just go through 3 examples. So example 1, let's imagine we're in those wonderful days before the national lockdown and the global pandemic, when we could still socialise. You call your partner and you say, I have to work late tonight. I won't be back for dinner. I won't be back for a while. And your partner says, fine. You know full well you're not working late. You're off for a couple of pints, maybe a few glasses of wine down the pub. So off you trot with your colleagues to the pub. You stumble home in the early hours of the morning and say to your partner, it was just a swift pint on the way to the station, honestly. Example 2, you land back from an overseas work trip at 10 p.m. You're exhausted. Your flight was delayed. You've had a full day of back-to-back meetings and the hotel you stayed in had a terrible bed, so you haven't really slept. Now, your company policy says you can't claim a taxi on work expenses unless your flight lands after 11 p.m. But it's 10 p.m, you're exhausted, it's cold, it's raining, and you're back in the office at 7 a.m. the next day. So in that expensive black cab you hop, and you put the money on your expenses card. Example 3. You're driving on a motorway, or for those of us that live within the M25 and can't remember what a motorway is like, you're driving through one of those 20-mile-an-hour zones that seem to be everywhere in London. Now, everyone else is speeding. You're in a rush and you think, everyone else is speeding, I'll speed too. So there you have 3 examples of how we might break the rules in everyday life. And most of us, I'm sure, can relate to one or more of those. Now, example 1, you're not breaking any laws and you're not breaching any company policies, but it is dishonest, and you might argue that it breaches the trust and integrity that a relationship is supposed to be based on. Example 2, you're not going to get arrested, you're probably not breaking any laws, but you know that what you're doing is not in compliance with your company's rules. Example 3, it's just a straight example that you've chosen to break the law. So what leads ordinarily law-abiding people like us to break the rules? Whether it's the law, company policies, or the everyday standard operating practices in a relationship. Well, I think often we justify it by saying that we aren't really doing any harm. We may even go so far as to say, well, everyone does it, indicating that there is a general culture of non-compliance with some rules and norms. And those are the excuses I think we've seen playing out during the COVID restrictions, certainly in the UK. Some of us may even have employed those when we went on an illicit outdoor walk with a friend in the height of the lockdown where we weren't supposed to be mixing households, often justifying it with, I'm not really doing any harm to anyone, everybody else is doing it. And for me, that points to 2 things. Firstly, it's the general culture, and you have to think not about just a rule break in isolation, but how those multiple small acts of non-compliance can create a culture where rule breaking is the norm and is accepted. So I think it's helpful to break it down and say, for most ordinary people, what lies at the heart of breaking the rules? Firstly, there's an incentive to break the rules, so you're going to gain from it in some way. A belief that you're not really doing anyone any real harm. And then thirdly, you are either unlikely to be detected, or if you are detected, you're not likely to be punished. So if we go back to our 3 examples again, your partner probably knows you were in the pub all night, but they're just going to roll their eyes and they don't care. And it's probably broadly accepted standard practice. You might be in the doghouse for a few days, but there's nothing truly awful going to happen. Example 2, you're probably not going to be found out by your company because nobody is checking the timestamp on the receipt for your taxi and working out when your plane landed, given it was delayed. And number 3, at worst, you're probably not going to get caught speeding, but if you are, it's a slap on the wrist, possibly a speed awareness course, and maybe a minor fine. So it's really about that balance of benefit and risk. Now, when we're thinking about integrity in a business context, be that tax integrity or any other type of economic crime or generally wider integrity, I think it's helpful to break it down into those 3 components and think about what behavior is your company incentivizing? How do you make the consequences of breaking the rules real to the people in your organization? And how do you create an environment or a culture where wrongdoing is detected and addressed? Now, you may laugh at this, but I think for me, having spent 10 years working on this area now, the biggest change in attitudes that I have seen, both within the kind of compliance sector and more generally in the public, was 4 years ago with the release of the TV show McMafia. Now, you are probably laughing. I remember binge watching that show on a flight from London to the Cayman Islands for work, and I landed and I was supposed to give a talk on economic crime, and I thought, great, this is everything we've been saying for years. Unfortunately, it wasn't yet streaming in the Cayman Islands and everyone was still obsessed with season 1 of The Crown. But hopefully people have broadly caught up with McMafia now. But for me, that show did 2 things brilliantly. First, you got to watch a seemingly ordinary person who articulated strong moral values and a strong code, how they found themselves slowly descending into lawlessness, starting with the smallest and most reluctant of steps. But more importantly than that, it showed how a few keystrokes in the movement of money in London can facilitate the death of trafficked women thousands of miles away. It showed that direct connection in a way that couldn't be ignored. Now, that is a startling betrayal of what law enforcement colleagues have known for their entire careers, which is when people can profit from crime, they will continue to commit more crime. You can't just tackle the criminal offence, you have to take the profit out of it. And whilst there are people who are willing to facilitate enabling people to access that profit, the crime will continue. I suspect most of us attending the talk today are very privileged in that we are not the ones on the receiving end of the consequences of money laundering, whatever the predicate offence. And no, a fine from the FCA does not count as the hard-end consequences of money laundering. I genuinely believe that if most people were to be able to clearly see the connection between their actions and the very dire consequences for real people, be that people suffering bodily harm, people being murdered, people being denied access to what should be state-funded services, that would be a much more powerful disincentive for them to break the rules, because they would see that their actions have very real consequences. So I think then, what does that translate to in the real world? What are the components that you need to create a culture where people act with integrity? I'd say there's broadly 4 components. First, you need a simple and clear articulation of your company's or your organization's rules and values, and you need those to be visible at the top of your business. It's not just about messaging, it's about seeing you people in your organization being seen to actively live and display those values. I can't be the only one who is lectured on the importance of gender equality only to see their organization's gender pay gap increase year on year. It kind of suggests to me that maybe it's not being taken seriously. Likewise, being told that work-life balance is important from someone working 14-hour days and weekends, the message somewhat gets lost. So I think there's nothing more clear than the message of don't commit crime in the office, but if you see the people issuing those messages breaking the rules, you're much less likely to follow them. Secondly, you need to look at the behavior that you are incentivizing. So are you offering financial reward or promotion or progression for excessive risk-taking? Do you have a mechanism for people in your organization to report concerns? Now, I have never understood the complete fear of whistleblowing that I have encountered in some areas of the private sector. If something is going to go horribly wrong in your organization, surely you want someone within your organization to feel comfortable and empowered to report that to you. Because I can guarantee you, if you do not have a safe space for them to report that in the office, they will go outside of the office and you will be facing a dramatically bigger problem. Thirdly, you need to help your staff see the importance of following the rules and acting with integrity, not because it ticks a box and avoids a fine for the organization, but because they have a role to play in preventing terrible things from happening to other people. I think for me, the best example of that was when I was in Singapore stress testing businesses' compliance procedures, as I mentioned, for the corporate criminal offences. There were a small number of firms who took a totally different approach to compliance. And it wasn't about giving their staff a list of things that they had to do. It was about articulating to staff that they had a very valuable role to play and a real opportunity to contribute to keeping other people safe. And rather than filling those staff with fear and dread about their job and things going wrong, they were shown the opportunity to do good things by doing right. And they had, I would say, some of the most effective compliance procedures I had ever seen, because everyone was bought into the vision of doing good rather than a fear of doing bad. And finally, you need real world consequences for people that break the rules. I cannot tell you how many times I've seen in the private sector people doing bad things in London, breaking laws, to then be moved to an office in a less transparent jurisdiction where prosecution is unlikely. Those people are essentially being rewarded for having done bad things and are protected by their organizations. Now, it can feel a little bit remote to think in those terms, but if you are speeding on the motorway and you see a traffic camera coming up, you will probably slow down because you are going to be caught. If people think that they will be caught when they break the rules and they will face real consequences and they see that happening, they are much less likely to break the rules. So I think my takeaway message is really, acting with integrity isn't rocket science. Yes, you want to design out the opportunities as best you can, but for people in your organization and connected to your organization, there are always going to be opportunities to break the rules, whether that's not living the values and the ethos of your business or breaking actual laws and regulations. There is always going to be for people a balance of reward and risk. And each of us will sit differently on that scale as to what it would take to make us act out of character and do something we might not otherwise do. But there are very simple steps as an organization that you can take to create a culture where breaking the rule is disincentivized and people feel empowered and supported to act in the right way. So hopefully a message of optimism and that simplicity is the best way when thinking about overall integrity. I wouldn't want to imply that compliance, for example, with the money laundering regulations is as simple as telling staff to do good and be good, but setting the right tone and getting the culture will help you with those more challenging detailed bits of compliance. And so perhaps if I hand back to you, Ali, with that hopeful message of optimism.
Thank you very much, Jenny, and as ever, so articulate. And I completely agree that, we're very actively involved with CCO programs. And sometimes it does feel like, going through checklists or, at best paying lip service, but it really is about that culture and trying to, imbibe a new way of doing things. And that's going to become very important. And, today's session is specifically about what firms need to decide for themselves. It's not about following one set of rules and another set of rules. It's about what they need to do much wider. So I think that's a really important point. I'm sure the other speakers will touch upon that aspect of it. The other interesting point of note for me is this, and I don't know where this belief comes from, this idea of taxation essentially being a victimless crime. And so making that connection, as you say, with the consequences and what it leads to is a very important education exercise that needs to happen across the board, whether it's the taxation, the regulatory bodies, or it's advisors like us, or actually the guardians of the organizations, the board of directors, how they roll that program out. With that, I'm going to invite Roger from the European Banking Federation. Roger, would you kick off by first of all just introducing yourself before your short response?
Yes, Ali, thank you. My name is Roger Kaiser. I'm representing the European Banking Federation. And good afternoon to all the participants. Well, you may know or may not know the EBF, the European Banking Federation. It's the voice of European banks. So we collectively represent approximately 3,500 banks in Europe, and I'm in charge of tax and compliance. So, well, over the last few years, the Europe and all the citizens have been facing a resurgence of terrorism. It was a very difficult period, and we have also seen an increase of human trafficking. And now with the COVID-19 pandemic, what we see is that there is an increase of some criminal activities. The pandemic has exacerbated new ones, for example, investment fraud. And what I hear sometimes is that money laundering is simple white-collar crime. I think it's about much more than that. It's about providing resources criminal needs to commit their crimes. And it's often connected to organized crime gangs, to very important threats, which include tax fraud. That's the topic of today's webinar, but also financial fraud, corruption, counterfeiting, smuggling, illegal drugs crime, and so on. So anti-money laundering aims to cut off resources to criminals and terrorists, and the fight against financial crime is absolutely essential. And in this context, banks have a very crucial role to play as auxiliaries to the public authorities. And this is true at three levels. First, banks are gatekeepers, and I will come back to this concept. Second, they are reporting financial institutions. And third, they are requested to act as withholding agents. So first, banks are gatekeepers. They control access of customers to the financial system. And they act as auxiliaries to the AML competent authorities, which extensively rely on them in the fight against financial crime through onboarding due diligence procedures, transaction monitoring requirements, and suspicious activities reports, the SARS. Second, in parallel to the AML and KYC requirements, banks are reporting financial institutions under FATCA, the US FATCA, under the Common Reporting Standard and its translation in European law, DAC 2. So tax authorities, again, they rely on banks to identify their foreign customers, the non-resident account holders, and to report information on the financial accounts. And third, last but not least, banks are withholding agents, which means that they operate refund and relief withholding tax procedures, which are aimed at ensuring that non-resident investors are granted treaty benefits in the source country, I mean the jurisdictions where the debtor or the issuer is located. So in a nutshell, banks ensure transparency of customers, account holders, investors, and they can play a crucial role in detecting money laundering related transaction. It's a prime responsibility of banks to support the efforts of the public sector in fighting money laundering and also tax fraud. On top of their capacity as gatekeepers, and auxiliaries to public authorities, banks also have the status as taxpayers. And here the question is often raised, often discussed as to whether banks pay their fair share of taxation. And particularly whether they pay their fair share of corporate taxation in the market jurisdiction, in the country where the customers are located. And such questions have been debated in depth and addressed by the OECD in the context of the BEPS action plan, the Base Erosion and Profit Shifting Action Plan. Today, there is still an action which is ongoing. It's Action 1, which is about taxation of the digital economy. This debate, this Action 1, has been extended to a discussion of a broader reform of international corporate taxation in the digital era, in the digital time. And the objective here, I would say the theoretical objective, is to review the taxing rights and to consider whether the concept of permanent establishment is still valid. And in fact, what is now on the table is a discussion about a new concept of nexus, which will be a kind of new layer to the traditional concept of permanent establishment. Now, what's the perspective of banks in this debate? It's important to keep in mind that banks are highly regulated, and that this regulation requires banks to have a banking license in the jurisdiction where they operate. And also these regulations provide for strict funding and capital requirements, also in the same country. So as a result, banks operate where their customers are located. This is particularly true for retail banking, and profit is recognized in those locations. I see the time is running. Another very important aspect of the taxation of banks, the discussion about banks as taxpayers is the question of VAT, which is often referred to in the EU by policymakers, because the VAT regime, as it applies to financial services, is an exemption regime, and this is very much misunderstood, very generally, I would say, particularly by policymakers and by the media, because they see in the VAT exemption regime applicable to financial services an advantageous regime. Actually, banks incur VAT on their own expenses. So they pay VAT, and because of the exemption regime, they have no right to recover this input VAT. So they support VAT. And in fact, this, I don't have time to enter into details, but this results in a lack of neutrality of the VAT regime as it applies to financial services and to the banking sector, unlike the other sectors. Now, I would like to conclude my contribution by mentioning the very important developments in finance, and which is the transformation to sustainable and responsible finance. It's a very, very important topic for the European Banking Federation, which has quite recently adopted a four-pillar approach to support this transformation. And I can briefly say that this strategy consists in first developing an appropriate regulatory framework which covers taxonomy, disclosures, etc., which also consists in encouraging and rewarding sustainability through specific incentives. We are also engaging in partnerships with relevant stakeholders, and we are also involved in educational programs, so with the objective of educating or help educate client and finance professionals. What I would like to emphasize is that this is not window cleaning. We are talking about something which is really fundamental. This is a game changer. Sustainable finance and the transformation to responsible finance is about a profound, very deep cultural change, which will impact our business models. And the buzzword here is transparency, and it's perfect to draw my conclusion here, because transparency is absolutely pivotal in the support that banks are bringing to the fight against financial crime and tax evasion.
Thank you very much, Kaiser. That's very helpful, and I'm really pleased that you did raise the issue of VAT, because outside of the industry, this it's a bit of a red herring, and people get confused about that, and the fact that it's lack of neutrality is a really valid point. I mean, within the UK, there is successive of tax measures that have been introduced, essentially to in opposition to the VAT point. You know, whether you've got banking levy, we've got surcharge tax, we have had you know, sort of like restrictions on the use of trading losses, and now there is currently this economic crime levy that's being talked about. So my concern remains that, which is the sustainability point, is how many times are you going to keep on hitting the same sector? And importantly, for the City of London, financial services is an important sector. So I think one needs to just be mindful of that, and policymakers need to think about that. With that very informative discussion, I would now like to invite Sandra. Sandra is a good personal friend, and importantly, she's written a very persuasive article recently, and I would thoroughly recommend that all of you should have a look at it, you know, afterwards. But Sandra, would you like to introduce yourself and present your talk, please?
Yeah, thank you, Ali. Good afternoon, everybody. I hope that you are doing me all well. So I prepared those 2 slides, and I'm going to try to give you an overview from the job that I'm currently doing, which is indeed working with the European Bank for Reconstruction and Development, the EBRD, the development bank based in the UK. I will talk a little bit more for the ones that don't know or are not familiar with EBRD in a moment, but I'm currently working in the compliance department of the bank in a specific unit, which is the domiciliation unit, looking at tax integrity risks, not of the bank itself, but of the project that the bank is looking at finance. And so I thought it would be a good match, apart from the article that I wrote, but also on with this panel on what is the stance of the EBRD in terms of tax integrity, and why did the bank care about it at some point. But maybe before I go into that, I think there's something very important, which is the momentum. So I think from the moment of the financial crisis back in 2008 and all the tax scandals that followed, Panama Papers, being it LuxLeaks, being fintech, being all the dividend arbitrage cases, that created really what I believe it set the stage, the momentum, not only for the legislative power to act, and that was mainly at the level of the OECD, creating the inclusive framework on that, baby erosion profit shifting, like referred by Roger earlier, and now developing further initiatives, the BEPS 2.0. But also the EU on different angles of tax good governance package. So that's what I call legislative activities that enjoy the momentum of all those leaks. But it went beyond that, in the sense that there was, and there seems to be still, an overall concern of different stakeholders of tax good governance, responsible tax behavior, tax integrity. It really became part of their agenda. And maybe one of the reasons for that, apart from the scandals and reputational risks, I believe that the fact that the Sustainable Development Goal also made really the point on the importance of raising tax as part of having sovereign governments that can help and develop healthy countries and generate wealth. That also played a role, a very important role. And I think we have already heard on other panels today about all these different initiatives running from business initiatives or from the B team on calling for businesses to have and endorse responsible tax principles, but also global reporting initiatives, principles for responsible investment. All of this really endorsing this idea of there needs to be a fair contribution. We should care about it as a company sometimes. So let's look introspective as a taxpayer. Are we paying the fair share of tax, like Roger alluded earlier? But also assessing others with whom we are dealing with. Are they paying a fair share of tax? Are they behaving correctly? And this is really made the scene and the scenario for development banks to become interested in this agenda as well and play a role there, because definitely responsible tax is important for sovereign governments, and definitely the EBRD wants to contribute to the Sustainable Development Goals. Maybe if you allow me just a word on what the EBRD stands for. So it's the European Bank for Reconstruction and Development. It was created in 1991 to help the transition of the previous communist countries into market economy and to help them in that transition period. So it's owned by more than 70 shareholders of 5 different continents. So it's much more broader than the European in the name in terms of ownership, and has more than 40 countries of operations, both in Europe, Central Asia, Middle East, and so forth. It's further expanding and considering to further expand. And I think that, like I mentioned earlier, it really resonates to the EBRD, this Sustainable Development Goal, aside from also the reputational risks that they have seen in seeing indeed as tax and tax integrity and tax avoidance as part of the risks that we should be looking at, to indeed revamp the existing policy of the bank, the so-called mutilation policy. And I think it's important to note this revamp, because indeed it really launched the revision of the policy, but also where it should sit in the organization. And so before, when it was more of a check the list exercise or formal exercise, it was sitting with the legal department of the bank. When it changed, let's say, into the new role of more governance due diligence assessment, it became a new owner, sitting now in the compliance department. Maybe I can give you a little bit of a glance into the policy and the due diligence. If you can move to the next slide, please. So maybe a word, what is there on the policy? I think what are we concerned? So at the high level, we look into, or I look into on a daily basis, should the EBRD be financing this project? So as part of the due diligence, we are looking into a specific aspect of it. We are not looking into all the projects. We have singled out the cross-border element as being the one that triggers the application of the controlling policy, of the administration policy, apologies. And also there, even in the presence of a cross-border structure, we have also draw a line on the players that we'll be looking at from a domiciliation due diligence perspective. So we're not going to be looking at non-controlling direct and indirect shareholders. So on a risk-based approach, we have excluded those from the scope of due diligence. So we have rather focused on who is the counterparty of the bank, where are they located? They are located outside the country of operations, then for us, they are a third jurisdiction, so we take an interest in that cross-border element. And if there are direct or indirect controlling shareholders, roughly meaning 50% or more of ownership or any other form of control of the counterparty, then we would also take an interest on looking closer on how those companies are organizing their cross-border structure. Now, how do we do that? And that was a big question, like how do we go about it? I think like any other due diligence where we have started, we have created a questionnaire that tries, of course, to single out a couple of risks. So we'll be looking particularly on why does that entity need to be existing in that structure chart, in that group? Why is it located in that specific jurisdiction? What is their economic presence in that jurisdiction? Do they have really assets, people, activities? What are they doing? What are the rules that they need to comply with? In particular, we do look at the new substance rules in a couple of jurisdictions that you may be aware of. And what are the tax implications? So trying really to understand, are really taxes being paid somewhere? Starting, of course, always from the country of operations where we want to make an impact, a transition to a better government, to a better, with a good project, with a private client. Is it something being contributed? Are any possibility of reduced tax rates, etc.? And why is that? Of course, we are trying to assess any risk of treaty shopping or abusive structure. And like I showed in the slides, then we have all the plethora of which standards are we going to look like? Or like I had some colleagues of mine, why do we care about tax avoidance? It's not even a defined term. What do you mean with that? Give me a definition. So we are now the risk assessment of the bank and due diligence now tries to assess the risk that cannot even be defined by law. So are we going to create our own definition? So I think it's also important to keep in mind this fact that all those legislative developments and other movements that I alluded earlier under the momentum really put it on the same path. The illicit financial flows, tax evasion, and tax avoidance at the same level. So, and I think that the paradigmatic example is definitely the EU financial regulation, where it is said that EU funds cannot be used to finance projects which could contribute inter alia to tax evasion, money laundering, and many others, but also tax avoidance. So all in the same row, all in the same category, all in the same boat. So maybe a question to all of you would be: does that make sense to treat them exactly at the same level? And last but not least, just the last word on the type of risks that have been identified. I think that they've created like three kinds of buckets related to the risk of an abusive structure, treaty shopping, and lack of substance. And there we have been really looking at promoting and trying to engage with our prospective private clients on having better presence on the ground or simplifying structures that are overly complex. But the same goes if they have what we believe to be excessive low strategies, meaning by using preferential tax regimes that were deemed harmful or excessive intergroup arrangements by way of debt or other fees. I think it will also be engaged in a discussion with them to basically repeal or cease those agreements before the project goes live. And the last one, on the complex and opaque structures, I think that this comes to the point on, sometimes we call it complex and opaque, especially opaque, not only because of potentially being opaque, because of the common reporting standard, but even sometimes because of that the jurisdiction is not yet there. So many jurisdictions have not yet implemented the common reporting standard, so they are not receiving the information. And I think that this is a good point on what are the limits. So the jurisdiction could actually be receiving, they are not yet there. So what is our role? Should we be calling for a voluntary transparency or not? And that would be my thoughts, and handing over to Ali.
Thank you very much, Sandra. Very interesting. I can see sort of like a DAC 6, but a much more broader approach being applied out there. I think one question I just had before we go to the next speaker is you mentioned about how you deploy this questionnaire to, before you fund or whatever support the counterparties, as you call them. Does that also include your, say, for example, people who co-invest with you or go into transactions with you, other financial institutions? If they're operating in, a low tax jurisdiction, the requirements for substance and so on. So I can understand bilaterally you're looking at it, but also are you looking across to your other counterparts?
So answering your question, Ali, we could be looking if there would be a situation where the EBRD and the other co-investing IFIs or commercial banks will create a joint vehicle and they would become a controlling shareholder. So in that case, then they would be in our policy a controlling entity.
I see.
But not in, let's say, a syndicate or any other situation where we don't have an ownership link with those other IFIs. Then we'll not be looking. We are definitely promoting, so that we are exchanging with our peers on what their findings, and we try definitely to have a common approach on projects that we are coming together. So not so much assessing ourselves, but assessing others in the same way.
And that's quite interesting with an institution like the EBRD, because as you say, you're applying peer group pressure, and I know you have a very robust department. You've talked about your checklist. I mean, I've seen some other agencies, government agencies, who are quite often promoting good works abroad, and they're not as far in their thinking when it comes to things like that, because quite often they themselves are, they enjoy sovereign immunity, so they're not subject to taxes. Anyway, let's moving things along. I will now invite Gavin. Gavin Helmer is a good personal friend, and well, Gavin, why don't you tell us what you're doing at Hansuke?
Yes, thanks, Ali. I take it from what you've been saying about all of us that we're all good friends here, so that's good to know. I've worked with Ali at Hansuke now, but have worked throughout my career in a number of different financial institutions in group tax and compliance functions. I was very happy to be invited today. I find this debate intriguing, very complex, and actually quite hard to get your head around it all. So let me kick off with a couple of thoughts. Firstly, I'll just say, Jennie, as I was going about my business this morning, I got flashed by a camera, and I wasn't following all the other traffic. I was on my own, but I just genuinely didn't see that 20-mile-an-hour limit. So it was, I'm not sure it fitted into your category. I was not attempting to break the law, but unfortunately I may be seeing a penalty coming through soon. One of the things about going last is I've actually completely changed what I'm going to talk about now, having heard the other speakers. I think it's very interesting to have heard you all and to think a little bit about some of your messages. If I start maybe with my views on this. I mean, I couldn't agree more with Jennie on what she was saying. I think some very well-made points around why people might behave in a certain way. Absolutely, that one would, and the UK has been at the forefront of trying to change behaviours, trying to change attitudes, which have shifted over time. From whether from a carrot or a stick approach, you can decide. But we know, of course, that even the Swiss banks, who were notorious for being involved in some of this stuff, have changed their attitudes on this, and are looking to get in line, if you like, with tax integrity. Keith Tate there saying it can mean whatever you like it, but at least there is an element of saying that it is behaving in the right way. And I would, from my perspective, as regards crimes, I think there is a simple way to view it, and to say that no respectable organisation ought to have any tolerance or any appetite for tax evasion or facilitating tax evasion or any financial crime or any crime indeed. And in my role in a couple of banks, I've been spearheading the campaign to try and make sure that is understood, and that is the culture that the organisation aspires to. And in doing that at a practical level, I again absolutely agree with Jennie. One has to ensure in your organisation you have a correct understanding of accountabilities. You don't want to spend your entire life just arguing and bickering amongst departments as to who really has accountability for this. Very much like the message of simplicity. I think the world in general is overcomplicated, and I think it doesn't need to be as complicated as both governments and organisations in the capitalist system have made it. And I think when it comes to financial crime and tax evasion particularly, simplicity really is critical, because people shy away from complexity and often shrug their shoulders and say it's too difficult for me. And so you have to have a simple message. And then deterrence as well. It is important to bring people on board and to bring them into the fold in terms of believing that behaving in the right way is appropriate or the right thing to do, but equally having a deterrent should they choose to ignore that, either willfully or accidentally because they're not paying enough attention. And so organisationally, I would suggest that very briefly, and I've said this on previous talks, that organisations should always be thinking in terms of defining risks, defining appetite for risks, and then defining policies and processes to tie in with the appetite that one has. But as regards crime, I think the appetite should always be zero, and it follows therefore what the policy and processes need to do, which is to ensure that the organisation and its employees and its agents are never involved in that kind of activity. But then that raises an interesting question, because I think both Roger and Sandra went through much more into the tax avoidance side, where I think things become very, very interesting. And it's not because I don't believe also that there may be certain ways of looking at things, but I think I don't think there's anybody present here who would deny that it is a very, very difficult debate. Because ultimately, even aggressive tax planning, if upheld by a court of law, it is legal. It does not have the same connotations as tax evasion and financial crime. And then you're having to make moral judgments as to people's behaviour. And I think I've had the words behaving correctly, and I think paying fair share of tax. And in preparing for this session, Roger, myself, and Sandra were having a good chuckle about extending the session to this evening to be able to actually properly debate those matters, because it would take an awful long time to get to the bottom of what is appropriate behaviour and what isn't in the context of tax avoidance. So issues around morality for me do become very difficult. So that's where we turn, a little bit, I think, away from the taxpayer, the organisation itself, to governments. And what are governments doing? I think that's a critical question. Roger's alluded to banks being, primary gatekeepers, and of course that's correct. But we'd like to think that governments will play their part, both in setting the framework and the right policies and the right laws and regulations to govern these things, but then also in enforcing and not placing undue reliance on organisations, not because they won't get it right, but in fact, as we've seen in a couple of recent scandals, just taking a very small example, because compliance departments have complained of governments not taking SARS very seriously, or not reviewing SARS, or not acting on SARS. And that can be very frustrating for organizations that are placed under increasing amounts of pressure to act as intermediaries, to act as withholding agents, to act as reporting entities, to believe or to have a suspicion that governments aren't playing their part in then following up. And as I say, I think they have a very important role in defining a coherent framework that everyone understands, and then ensuring that it is enforced, and that they support the banks and the industry in ensuring that it is enforced. And for me, an element of collaboration, which I think exists to some extent, but it's a question of whether it should be stronger and could result in more effective action both by the organizations and by governments. And maybe just picking up on DAX 6, Ali, that you mentioned there. I have again spoken on many occasions about my views on DAX 6. It's not that I disagree with its intent, but it was rather a rushed affair. It confuses evasion principles and avoidance, hallmark D, with the other hallmarks, throws it all into a single melting pot. And again, the muddying of waters between evasion and avoidance is not helpful, I don't think. And if we are to pursue a more rigorous approach to avoidance, then I think that has to be properly debated. And the other concerns people have around DAX 6, the industry might have around DAX 6 is that there's going to be, I think a lot of people believe, a lot of reporting of a lot of things that really have nothing to do or nothing to trouble governments. And again, that goes back to the point of, in my personal view, governments needing to be very clear, have a coherent policy framework, probably work much more closely together, and not just the EU, but across the Atlantic with other countries and out to the Far East, and to come up with something that again is much more robust, if that's where governments want to take it, of course. And maybe that raises the last question I have is, from my perspective, picking up on all of these things, is we've talked about harmful tax practices, about various different approaches, and the reality is that there doesn't, in my opinion, appear to be a consensus view on many of these matters. I think tax evasion, probably there is a consensus view from most countries. Again, it's a crime, so it's a little bit more easy to have a position on that and stick by that position. But when it comes to matters of tax avoidance and unfair or harmful tax competition, how do we view Ireland's practices over the year? How do we view Luxembourg's tax practices over the years? Some people are very critical of them, others aren't. Others think, well, that's perfectly acceptable for a country to set its tax laws and to incentivize inward investment. On the evasion front, you might argue that the UK government has possibly incentivized or encouraged the inflow of high net worth money, which has worked a little bit against the efforts of banks to try and be able to pick up on financial crime and tax evasion particularly. And so you may have competing goals there between government and the industry or the banking sector, which is intended primarily to act as the gatekeeper, as Roger mentioned. So I think, as I say at the start of this, I think it's highly complex, extremely interesting. I do have very strong views about how, as an organization, you ought to go about safeguarding your position and developing the right culture. And I do think large organizations understand this, and it's all part of the sustainability debate and the debate that goes with ESG more generally. Smaller organizations there may be organizations which will continue to act illegally, but it's no different to saying that there are going to be criminals in the world. We're not going to get rid of all behavior or all illegal activity, but in as much as we can change the culture in large and established and even medium-sized organizations, I commend what the UK has done, what the excellent work that Jennie and her team had done on that, and long may that continue. But as you will have sensed from what I've said, I have some frustration on the evolving debate on avoidance versus evasion and how that's best to be tackled. And I think that needs more rigorous debate in all sorts of areas. Ali, I think I'll stop there.
Thank you very much. And I do know a little bit about your views, and particularly that rose-tinted sort of like search for the good old days when tax evasion and avoidance were two distinct things. That is obviously something that perhaps after Brexit we might have the freedom to achieve. But linked to that, I mean, just in terms of, I know you don't like the area of tax morality, but it is there. And we did talk about specifically, Roger touched upon the fair, the fair taxation sort of like debate.
Yeah.
And there was that, that coffee shop sort of like who felt it right to voluntarily offer 20 million to the UK Exchequer. Because, so is that kind of thing is just completely out of the window in your universe?
Well, I sort of favour the CEO of Apple's view on some of this. It's not. I don't believe it is black and white, but I think it is. There is more emphasis for me on governments to set the framework of the rules, and the OECD and other bodies, and then for taxpayers to follow those. It is complicated, but I mean that coffee shop, for example, making a voluntary contribution was never going to work anyway, or was a strange notion behind all of this. From the consumer side, people started boycotting that coffee shop. I wonder if those people are still not drinking that coffee. I mean, I don't drink it for other reasons, but I don't know if those people who stopped drinking that coffee are still not drinking it, because maybe that's just lost in time. But the morality, the problem I think with the morality debate is that everybody has a different threshold, or most people will have a different threshold. And as I've mentioned before, there are those who believe that the use of tax losses against profits is some sort of wicked act, even though it's provided for as a matter of statute. And there are those who believe that people availing of ISA reliefs is, it's a little bit touchy. But of course, again, that's you would be crazy not to if you can invest, and you do have, you're lucky enough to have savings to invest in ISAs. So I think the morality debate does need, it needs more thought. But at the moment, I think it's, yes, applying moral judgments in the area of tax planning or even tax avoidance, if we want to use that word, is quite a dangerous path to follow. Not that I don't think, for example, the EBRD should make an effort in that regard, and I think it's absolutely right. But it's a very difficult area to be involved in, I think. From that perspective of having to make a moral call, because then you do go down the path. You should make a moral call on everything. And if you have an Apple iPhone and you don't like Apple's tax practices, then I suggest you sell your phone and go to Samsung or something else.
Yeah, absolutely. I mean, I think that the issue is a relevant one. It is a philosophical discussion. You're absolutely right about morality, because it is ultimately an aesthetic judgment that you make. And maybe that's the reason why we're having this discussion about integrity, because I think firms will have to sort of like act as agents, have the agencies sort of like to be able to make their own choices. And that is part of the concern that I have, is that quite often you will get governmental action, but that autonomy that which organizations must exercise, and it's the board of directors which must exercise, in order to determine where they want to be. And that is part of the concern that I've got. And I'll go to some questions now, which is, why is it that, what are the reasons for the inefficiency or the lack of effectiveness in the fight against financial crime, specifically to do with taxation? What is going wrong? If I may invite Roger and then Jennie and Sandra, order, if that's okay.
Well, thank you, Ali. Well, it's a very, very, very broad question, and of course we can discuss very long on that. I think there are mainly 4 reasons for the ineffectiveness of the fight against financial crime in general with the current framework we have in Europe. I would say EU and UK included. I think the first reason is the regulatory fragmentation, and when I say that, it's the fact that the AML framework has been implemented across the EU with different interpretations and big variances in implementation from one member state, one jurisdiction to another. This doesn't help, of course, the work of regulator. It doesn't work the work of law enforcement agencies. It doesn't facilitate the work of multinational groups, banking groups, because it's difficult in such situation to develop international wide AML programs. And at the same time, such regulatory fragmentation helps criminals to use loopholes and to exploit the regulatory weaknesses and inconsistencies in one jurisdiction, in the weakest jurisdiction, to launder funds and then move these funds around financial markets. So I think that's one of the core reasons. There is some noise on the. I don't know whether you couldn't maybe switch off your micros. So the second the second reason is very much linked to this first one, is also a question of fragmentation, but it's an institutional and functional fragmentation, which includes the supervisory fragmentation. So very much the same kind of issue with a different setups across Europe. I think then I would mention that there is, and it's a very, very important problem. There is a massive flow of data, of suspicious activities reports, which are filed to financial intelligence units. And I would say that it's very much like having to find a needle in a haystack. The number of false positives in the massive flow of SARS is really huge, because the system has favored quantity over quality, and this is really a key problem. And maybe last but not least, the problem of the current one of the major problems of the current system is we have mentioned that during the discussion. It's the tick the box approach, and a fundamental lack of information sharing between the different actors of the AML ecosystem, and a suboptimal use of new technologies and appropriate to reduce the haystack I was talking about, and also in addition, on top of this lack of new technologies, lack of appropriate tool, and I'm referring in particular to the ultimate beneficial owners registers, which lack interconnectivity and which also lack reliability, hence failing to ensure beneficial owner transparency.
That's very helpful, Roger, and I like the idea of your fragmentation approach, and or should I say arbitrage between regulatory authorities. And it was a talk earlier today that was given by Philippe from SocGen. He was talking about the QI regime, and that's quite interesting because they have the idea of it. The Americans have this approach of expanded affiliated groups, so you're only as good as your weakest link. So, you know, it doesn't matter where you are in the group, where you are in the world. But that's America. Coming back to the UK, Jennie.
Can I just check, Ali, was your question, why isn't it going very well?
Yes, lack of effectiveness.
Okay. Oh, so many reasons. I think, firstly, I think it's going better in tax than it is in other areas of financial crime and money laundering. The nature of, that's one of the positives about tax being treated in a silo, and the way tax competent authorities around the world exchange information and the interconnectedness and just the volume of data that you collect regularly on tax. So I think they have a greater data pool, they have greater interconnectivity and greater cooperation because of the way in which they exchange tax. So it's going a lot better on tax than other areas. On financial crime more generally, I'd say resources is a huge issue in the private sector and in the public sector, particularly in the public sector. If you're talking about people needing to see and feel the consequences of wrongdoing, I think our prosecutions for money laundering are down 11% in a year, and over a 10-year period, they're down 45%. Now, you can't see exactly what's behind those statistics, because if you were, a lot of our prosecutions are for quite low-level money laundering, so self-laundering for drugs, etc. If that was a real shift to the high-end stuff and focusing on the worst offenders, you could understand a reduction in numbers, but it's not. Although we're seeing a big increase in civil recovery, I don't think that suggests that we are policing to the level of the harm. And so I think resources is a huge issue. And of course, as a government and others, you have to balance it against all the other requirements. But I think effectiveness would be increased if we had more resources. In terms of the really interesting chat that's been going on in the sidebar about the extent to which law should reflect morality or morality should interact with the law, we're kind of having a 120 characteristic version of the Hart-Devlin debate. I mean, this is something we've been debating for time immemorial, and you can go on Amazon or any other kind of tax obliging or non-tax obliging online retailer whilst the shops are cut and get a slimmed down version of the Hart-Devlin debate, and it will tell you everything you need to know about both sides of those arguments. It's a really good read. Hopefully anyone that's gone to law school has been forced to read that back to front already. But I think it neatly summarizes.
What was the name? Sorry, I forgot.
Hart-Devlin. It's just Hart, but without an E, comma, Devlin debate. And it's exactly that discussion about the interaction of law and morality and the extent to which one reflects the other. But yeah, so I think resourcing for me is the big one, but also a kind of creeping feel in society that it's fine for me to break the rules, it's everyone else that's the problem. So if I get a 20%, I mean, our tax minister, David Gauke, back when he was in government, like years and years ago, I think he got laughed at for making the statement that we criticize everyone else, but when we ourselves facilitate tax evasion, so when we pay cash in hand to get the 20% off, whatever it might be, we justify that by saying, well, there's no harm. You know, it's everyone else that's the problem. It's not me. I'm not contributing to the problem in any way. It's always the other guys. I think that attitude, it may start small, but it gets bigger and bigger. And I do agree with what was said in the sidebar around a big incentive for companies and taxpayers is their client base. So if you were Apple, which is the example in the sidebar, and people stop buying your products as a result of the way you behave in relation to tax or anything else, might you change your behavior to get your customers back? Well, yes, because your profit margins are being impacted. I'm sure that would be the same for any other business. If you're a business out to make a profit and your profit is impacted by your behavior because your consumer base changes their patterns, you will change your behavior. I think, yes, we're talking about tax, but if you look at something like, say, plastics in supermarkets, that is a great example of how behavior is changing because the customers and what the customers want is changing. Why did that change? Because the consequences of using non-recyclable plastic became real to consumers. They changed their behavior. Businesses responded to that. So I think, yes, you can have laws to a certain extent, but really you need to be thinking about kind of public behavior that also has a huge impact on how the businesses can act. So there's lots of different levers that you can use to get the generalized behavior that you want.
Perfect, thank you. That's excellent. Sandra?
Yeah, I mean, I think that on my side, I think I would give an example. On the one hand, my experience with the tax crime is also a new predicate offense. It's a new control into the IML CFT. That means that it's new for the first line of defense, for the second line of defense, and for the third line of defense, right? I think that is one point. Then we have different regulators suggesting different indicia and risk indicators, which some of them sit on the fence between evasion and avoidance. So we enter also into this blur, which is also not helpful into identifying and also into the learning curve that compliance officers and first lines and banking and regulators have to go through. I mean, to my mind, a very specific example that I come across regularly is what is a complex structure. So when does one need to tick the box within an organization to say that the client has a complex structure? So there is indeed a subjective element to it, but on the one hand, and that goes back to this thing of law and morale, right? The law refers to complex structure as a potential being used as for illegal, but for tax avoidance purposes. But what does it mean? So when do you tick the box of complex? And that may depend maybe on our own ethics or integrity or the policy of each different private investor or financial institution. So it really brings us back to this discussion on between law and morale, and the same goes to our assessment in tax avoidance domiciliation only, when we definitely are looking into assessing our clients into international accepted tax standards. But one of paramount example is that Section 6. There will always be a subjective assessment of whether there could be a treaty shopping risk or not. We can rely on all fields of case law and jurisprudence and reading materials, etc. But there would always be a different judgment call there, and that may indeed be influenced by morale or other integrity, and that's probably not good, but maybe it's something that we cannot avoid. Wanted to share with you that each of the complexity which sits at the board on tax evasion and tax avoidance.
That's interesting. You say that it's just hit the radar, and it's quite interesting because, you know, tax crimes have been a predicate offence, you know, since POCA, and you know, I see so many AML policies and procedures, and they're completely silent on taxation. Anyway, Gavin, do you have any reasons why you think of this is ineffective? We can't hear you, Gavin.
Sorry, I was saying I don't want to use up too much time on really regurgitating what the other three have said, because I agree with a lot of those points. For me, I go back to coherence of the policy framework. I think it's important, not just locally, but globally. I think Jennie's point on resource, I mean, this stuff is intensive and it needs a lot of resource. And then Roger's point about, you know, the fragmentation of it. I mean, those three things for me are quite key.
Well, let me ask you a very specific question then, Gavin, which is, you know, Jennie started the talk by talking about consequences, and I think sort of like, unfortunately, we have got a society where we need to think about consequences. Now, we have had the strict liability offences for bribery, then the failure to prevent tax evasion, and there's obviously this whole discussion going on about the whether that strict liability offence should be extended to preventing economic crime in the wider sense of it. Do you think that would probably sort of like drive the right behaviours?
I'm not sure that of itself drives the right behaviours. I mean, behaviours are symptomatic of, if you just layer something new on, you haven't addressed the root cause of why people, to Jennie's earlier points, why people might choose to ignore rules. So we know that cultural mindset change is one of the hardest things to achieve in any sphere of life, in organisations, in societies, in down in your local church hall or whatever it might be. If you're trying to develop a change in the culture, that can be very hard and can take a very long time. I think we're on the right journey, maybe. Certainly from my experience of the tax world over the last 20 years, I do think attitudes have shifted, but I think there's some way to go. So I'm not sure that layering new principles or new rules on, or saying that we have a more embracing anti-economic crime principle changes people's attitudes or behaviours. I would think that was my understanding of what the corporate criminal offence was brought in to do, in part to be able to prosecute where necessary, but also to really sharpen the minds and focus people's attention. But at the same time as rules might change people's attitudes, there's nothing like consumer power, I believe. I mean, we've talked a little bit about that, but the world will continue to evolve that way as well, and more pressure groups putting pressure on organizations to disclose how they pay taxes, where they pay taxes, what their policies and strategies are. I think collectively all of these things might start to, or may continue to change attitudes towards it.
Well, obviously the role of institutions is very important. So by turning up the heat and saying you're essentially automatically guilty until you prove your innocence, that's one thing. The other thing is, I know you recently penned an article on the new economic crime levy as well. So making it painful for the organizations. I mean, aren't these measures going to drive the right kind of behavior?
Well, the financial crime levy?
Yeah, the economic crime levy.
No, I don't think so. That for me is, from the article that we co-wrote, is arguably more of an irritant than anything else. It doesn't necessarily, again, change your attitudes as to for me, that was a piece of legislation that was going to introduce yet more burden, yet more complexity on organizations. That for me is never an answer. In fact, again, the thing I most believe in is simplicity, or at least an attempt to keep things as simple as one can, so that one can focus on what the real key issues are. And probably my reluctance to wholeheartedly embrace the avoidance and evasion blurring is that actually we really have to sort out evasion. I know we have to sort out avoidance as well, but there's still far too much evasion going on in the world, and that really does have to be tackled. And if we just start blurring lines all the time, it all gets mixed up, it all gets very political. Everyone pretends that lots of new rules are doing something when maybe they're really not achieving what they should.
And I think that's the challenge, isn't it? Whereby we feel that just by introducing lots of legislation, lots of checklists, but it's not having the right effect.
Mm-hmm.
Now, linked to that, we've talked about the ineffectiveness. Let's talk about what is it that's going to fix that very thing. So if I can sort of like perhaps invite Roger again, you might want to just comment on what is it that, particularly in the financial services sector, the role of banks as intermediaries. You use the term gateways. I mean, what is that we can do or we should be doing in order to fix this wider issue, societal issue?
Thank you, Ali. First of all, I would distinguish the tax framework and the AML framework. I think the tax framework just to ensure transparency is quite complete and far-reaching, even sometimes I would say goes too far. The AML framework is I would say very inefficient, and so they are there are a number of actions that are required. I was talking about the regulatory fragmentation. In the EU, the Commission will come up soon with proposals for AML regulation. And so, what should be in there? It's not the only solution. I'm saying that immediately, but that's one of the solutions, one of the actions that have to be taken. I think we have here to move from the tick the box approach. It's clear if the Commission put on the table a new regulation, the spirit should be that we move from a tick the box approach to something which is more flexible and first of all, which aims to mitigate risks. But it's a very difficult debate, because then comes the question: should that be rule-based? Should that be principle-based, etc.? Because of course, it's more comfortable to a certain extent for a financial institution to have a rule to comply with. That's something that may provide more legal certainty. At the same time, it's not efficient to fight against financial, to prevent financial crime. So we have in this new regulation, we have to first of all to modernize and harmonize the KYC policy. And what we need is a harmonized basic set of data, KYC and beneficial owners. Basic KYC UBO set of data. That's the first thing we need. Then we have to put in place to clarify how we deal with more risk-related items, and that's the difficult part, I think, in the future regulation, EU regulation. We need, in any case, here more flexibility in the field of enhanced due diligence, publicly exposed persons. Also in the treatment of correspondent banking relationships, which is far too prescriptive at the moment, and drively risky. We need to use standardized tool, and I'm thinking of notably of the Wolfsberg Group's questionnaire. And we also need more flexibility in the transaction monitoring, which must be more purposive and should also exploit shared utilities. But on top of the regulation, what is very important is that we move to an intelligence-led approach. I was referring to the massive flow of suspicious activities report. We absolutely need to better understand, as financial institution, to better understand the definition of a suspicion and what is expected by financial institutions and by regulators, and to get a feedback from that. We absolutely need to share information between the public actors and private sector actors. And one way to do that is to promote the PPPs, the public-private partnerships, and to be able to exchange operational data in that context, to help improve information sharing. We should also use shared utilities. It's very important, and for those two developments, both the operational exchange of information within PPPs and the use of shared utilities, we also need to have clarification about the application of GDPR.
Roger, I'm going to be totally rude and draw the discussion to an end. I'm just conscious of time. I think you raised some really good points, and particularly the shared utility. I was talking to the guys at TISA who were talking about digital passporting and the idea that, you know, this world where perhaps a bad example, but, you know, not every airline has their own airport. So this similar kind of thing that every organization is trying to replicate and doing it in a mismatch is something that I think technology will probably play a role in. John Buckridge has raised a really interesting question, and I'm afraid that's all I can say, and I would encourage you to have a look at it, but we won't have time to answer that. But all that remains for me to say is, first of all, thank you to all our panelists for taking the time. Really interesting debate, and as Gavin indicated, we could have gone on for many hours to come, and perhaps, as Jennie suggested, we could tell our spouses, and after the lockdown, we go down to the pub and have a discussion about this. With that, I would just like to thank also our participants, our listeners. Thank you very much for the chat, and I look forward to welcoming you tomorrow at 9 o'clock. And with that, I'd like to draw today's discussion to an end. Thank you very much.
Thank you, Ali.
Thank you.
Thank you.